All right. Good morning, everybody. The SPX closed at 66.30, really close to the COG line, 66.32. If we look to the upside, this 50 line and then 6,700 is the trouble we have looking forward. $66.50 and then 6,700. If we can even push into it. So that TRB push back up, it stalled. Likely doesn't make it. Everything is focused on the government shutdown and the implications that go along with it. Japan down 0.5% with the small caps right behind it. Then the Dow, the S&P, and the NASDAQ all clustered together. Less than a quarter, though. Hong Kong up, but less than a quarter. And then a little bit of UK. We've got a lot of Fed speakers from around the world who are going to be chipping their teeth today. It's just nonstop all day. And we're going to get job numbers again because it's jobs week. So every day this week, we're going to get job numbers. The JOLTS number, this one, I mean, all job numbers are important. We wouldn't want to discount any of them, but some have different weight than others. This one is more of that warm, fuzzy feeling. If you was to leave the job that you have right now, how hard do you think it would be to find another job comparable or better than what you've already got? This is often called the take this job and shove it number because the grass is greener somewhere else and you feel confident that if you quit your job, you could easily find another one, the JOLTS number. So I don't put too much weight into this one. Still, it is job numbers of any kind, and you want to keep your eye on any job numbers at all. We do have auctions today as well. We're getting the 52-week. So there's that. Some markets are going to be closed around the world. China, I believe, has that national day. The put wall rolled down. It wasn't a lot, but it did roll down. So that kind of gives us a little bit of room before we find some structure. 65.50. Well, the 66.50 is where the 20 period daily moving average is, and 65.40 is where the 50 period is. So we're talking about having the put wall right down there on the 10-week or the 50-day. They kind of all just overlap right in that zone. And if things began to accelerate to the downside, that's the target. But we're talking about cutting below the 20 period daily moving average. And if you look back, what we've been doing when we got under that 20 is getting heavily defended, holding the line and running back up through the 20 again. We really didn't stay below the 20 for very long. So it would have to be something really big, really negative to get us below the 20 and then continue to expand even farther below the 20. That would be the concern. So closing at the lows, failing to get back through the half, closing at the lows again, you get the idea, right? Just working its way down. It doesn't have to be big Marbozu bars that close at the bottom all the way, but on the bounce back the next day, we don't want to see it breach the previous day's midpoint and close above it. That helps sustain that drop lower without freaking everybody out. We are still within inside this range that we've been talking about. I believe we're done with the TRB at this point. The reason that the TRB is so good is because that one bar, the bar that's supposed to make the go, it's supposed to get there in a single day. Can this get back up here? Sure, absolutely. But that's not what we're looking for. What we were looking for is a single shot all the way back up, like right here. This is the kind of bar that makes TRB so fantastic. So we could still get back to 67.50, right? We could chop sideways for another day or two and then ease our way up in there by the end of the week, something like that. So what? That wasn't the goal. Due to the mechanics of yesterday's price and how it closed, the TRB is done. It failed to make it back up there. So now it'd be more of just a scoop pattern that we could complete this move however many candles it takes. On the other side of all of that, though, is the idea that this is a range. And as with any range, we can measure that range and focus on its midpoint. We're back above the mid, 66.90, just easy math. So we would want to cut below the 10-day moving average or that midpoint line that I just drew. They're both in the same spot. If we fail that, then we'll check the bottom. Once we poke outside the bottom, then we've got the 111, the 1236. We can try to play the OCC. And if not, then we got the 50 down here. So one of the good things, I guess, if we were looking for silver linings, is that we are above the midpoint. 63,000 in the overnight. That's not bad. It's decent. If it was out of line, say really low in the 30s or 40s, we'd want to go look around and find out why. Maybe there was markets closed around the world that was impacting the amount of trading volume. Maybe there was something they were worried about and they were sitting out waiting for it. We'd want to know why it was so light. And if it was, say, above 100, then we'd also want to go looking around and figure out why are they trading so heavy in the pre-market. But it's within the normal range, so we're good there. The midpoint is easily marked on your intraday because it's that 10-day moving average. A lot of trading platforms now will let you mark your daily moving averages on your intraday chart. So just put your 10-day on your 5-minute or 15-minute, and there it is. You can do that with TradingView, Thinkorswim. I think Tasty does it now. TrendSpider, a lot of them do it. So we're kind of dancing around this volatility trigger into zero gamma line. Even if we get below the zero gamma, just getting below it doesn't necessarily immediately engage the negative gamma dealer dynamics, right? It's not that sophisticated and it's not that sensitive. We'd have to get below it and sustain below it and then look up and down the curve at where they are. Right, so it's a good idea to know where the zero gamma line is in the volatility trigger, because if we did expand significantly in a single day, that's a good line to keep your eye on. But if you're looking for when will the dealers change their function and swap over to the other regime, it's not just because we got on the other side of that line by a couple of ticks. We don't yet have a 310 cross. Since price got back above the 3 and the 10, they won't cross. We have to get below the 10 to bring the 3 with us, and then we'd have a 310 cross to the downside, and that would be a bearish surge signal, but we don't have it. We are closer to the lower ADR than we are the upper ADR, but that's not saying much. The upper one is inside of yesterday's price action, so at the bare minimum, we wouldn't need an inside day breakout to get there. We tried to break out last night and got defended and came back in. So that's kind of the line in the sand that we want to focus on. That's the RTH of yesterday. But if you look back, there's also the Globex of yesterday. So if you want to just do that the easy way, for messing with yesterday's price action, just go to the daily and mark the daily. I could have swore the Globex was a little higher. Maybe I was looking at the NASDAQ when I did that. Yeah. So the RTH low of yesterday apparently is the low of yesterday. That'll work. Makes it easy. So if we're looking for an expansion to the downside, that's the line in the sand we have to get through. If we get through it, then it's a simple shot that we're just going to go at the bare minimum to the ADR, 6680. Now you could worry about 111 and 1236 and all that, but if we got that close to the ADR, we're just going to go hit it. That would be the base case argument. The other part of it, though, is the midpoint trying to come back the other direction. We've tried that multiple times last night, and we failed. So if we do rally off of the lows of yesterday and we make a run for this upper ADR, 6732 cog line, we've got to get through this midpoint. And so far, that's been some tribulation we haven't managed to accomplish. We are still above the weekly floor pivot, which continues to put us in a bullish bias, but obviously we're not feeling very bullish when we've faded since Monday morning to be where we are now. Below 6692 cog line, which is the weekly floor pivot, we've got yesterday's missed daily pivot. So that counts as our first MDP. We don't have a consecutive missed daily pivot because we've already hit today's. We chopped about it for half a night before we expanded away from it. The expansion happened during the kill zone as it's supposed to. Basically at the Europe Open, we dropped down and then we've been kind of holding since then. I thought it was interesting that we didn't run back up and close this liquidity gap. A lot of times the move that we get in the kill zone, we just unwind it again. It's a really nice, Globex layup. It's just a nice little trade you can get. Is closing that gap from the move in the kill zone, but we didn't close it. Kind of stalled out on this midpoint if we were to measure just this little bit of movement from Europe Open. So it stands out just because we did something a little different. If we break the weekly floor pivot, focus on yesterday's floor pivot. That'll be a gravity or a magnet that we want to expect price to go to. 66.85. Just round it up a couple of pennies. Buried inside of all of these lines is the S1, 66.91. It's really close to 66.92 cog line. It's close enough. So it's just another layer that's down there. To the upside, got R1 and R2. The reason I mention R1 and R2 is because of the setup S1 to R2. It's a pullback function, the way we expect price to behave, right? When it's been moving to the upside and then it pulls back into like an S1 and then makes a run into like R2. So S1, R2. I don't think this really has the framework for an S1, R2, other than, you know, we zoom out here a little bit. We had that constant grind that we were talking about, but take it back to Thursday. That's our run up. There's our pullback. If that's what we're messing with, then this is a really decent pullback to the S1. We should see it go from S1 to R2 and then test an expansion beyond that. 67.50 probably gets us into like 67.65 or 67.70. We have no reason to be bullish, right? Not especially with all the backdrop of everything that's going on. We have no reason to be bullish, but we really don't have any reason to be bearish other than the skittishness of the market, right? Everybody's nervous. They're worried about the government shutting down, what kind of numbers we're going to get from the job numbers. And now they're saying if the government does shut down this week, you're not going to get Friday's numbers, Friday's job numbers. You got to have a government to get the numbers. So that's going to weigh on sentiment as well. I know. How come I never have good news in the morning, right? What moving averages am I using? The ones I've always used? 3, 10, 20, 50, 200. You can swap the 3 for the 4, the 10 for an 11, the 20 for the 21, right? Like I think I've proven over the years that you can use any number you want. I know people that like 8 instead of 10. I know people that like 12 instead of 10. And yet if you're using an 8, a 10, or a 12, it doesn't matter. You could use the 3, 4, 5. They all work together. 20, 21, 32 is really popular. 50, 55, they're interchangeable. And it doesn't matter if it's an EMA or an SMA, which is why I've got 2 purple lines, 2 orange lines. It's just to prove my point that it doesn't matter. Two greens, 2 blues, one's an EMA, one's an SMA. And it just doesn't matter, right? Whatever you like, you're in charge. We are back below the distribution. We're back below this week's point of control. So if we want to challenge the half that we've already laid out, we've got to get back through that point of control and then through the half. If we break to the downside, 66.92 is also last week's point of control. So we got a little bit of structure there. It's very likely this structure that we hit yesterday that helped us out and that we hit this morning that's been holding us up. So get through this zone, it gets shallow as in again, and we can move through shallow areas relatively easy. And then it starts to fill out around this 6660 area, like a front run on 6650. Last week's distribution model was just nasty. It just makes me think of those hoarders that you see on that Hoarders TV show. Cluttered junk everywhere. That's just cluttered junk everywhere. And even if there was something useful in it, you'd have to spend an hour looking for it just to throw out all the junk to get to it. All right, as we've talked about, this has no pattern at the moment. And when things finally move, it's very likely going to move up into 6750 and be a weight around our neck. So that's not going to be helpful at all. And that's when it finally moves. The only thing that could change my mind on this anytime soon is if we break down into this lower area, this 6670, before we remove all of these candles over here. Because every new candle we get on the right removes a candle from the left. We will eventually wipe these candles off the board. But while we have those, and while we have these, we've got all of this volume here. So if we drop down into this zone and we start building that volume out, then the point of control could move down here temporarily. Of course, once we get here and we lay out more candles to the right, we will lose these candles from the left. And the point of control at that point would very likely move up here. It looks like we're strategizing for a little league football game. Now we just need cupcakes. So that's not useful, right? There's just nothing here of value at this point. It's trash. If we had a clean pattern, that would offer some value, but at this point, it's trash. The VPOC that we marked out, 66.95, got tagged in the pre-market today. We don't take it off today. We take it off tomorrow because it got tagged today. If it was tagged yesterday, say yesterday afternoon, if we had dropped down into that yesterday, then we would be removing it today. But at this point, it stays on all day and we'll take it off tomorrow, which means we still have 66.95 down there as a level of interest. Keep that one on your radar when you're looking at the trade flow. Otherwise, we don't have a new VPOC from yesterday because we've crossed that spot multiple times. And this morning, we have a bit of a disagreement between the right profile, which is TPO, and the left profile, which is volume. The lower one is a really clean distribution. I mean, almost like a standard deviation bell curve. It's beautiful. The upper one, it's a bit janky, but we're likely to see this point of control move down relatively soon. That's a lot of work that we've seen get put in since Europe opened. If we break this Globex pivot here, we should move through this shallow area relatively easy. Right, there's like this pivot structure right in here. Just call it 67. Oh, would it be like 6705? Then we got this shallow zone, and we should be able to get back up into this mess. It just looking around out there, continue to ask what's going to be the positive catalyst that gets us moving to the upside. And it's hard to spot anything to be positive about at this point. If we get headlines that we averted a government shutdown, I mean, that would probably do it. That'd make everybody all warm and fuzzy. Other than that, we're kind of on slim pickings for good news. That was a perfect time for somebody to say, yeah, but I saved a ton of money by switching to Geico. Some silly like that. Yeah. We are above Friday's close. So looking back on the week so far, we're still in a positive environment. We are still above the 10-week by almost 2.5%. And while this very likely is going to represent a lower high, we are still inside that candle. So we don't count it as a lower high yet. Right? This is one of the bad things about using technical analysis as opposed to some other means is at this point, we can't count this as a lower high. We have to leave it and then look back and say, oh, wow, look, that was a lower high. And that's because we could just continue to go up and we wouldn't even count that, right? We would just eliminate that completely and it would just look like that. So until we leave this range and actually come down and define it as a lower high, it's not yet a lower high. So we only get to say good things about it, which is that we're still above Friday's close. We're still above the 10-day and the 10-week, and everything is fine. We don't have any signals of negativity. We just have negative sentiment. And we're really close to the 10-day. At this point, the 10-day is not supportive. We wouldn't look at it as a line in the sand to act as support or resistance. We would expect to crisscross back and forth through there like it doesn't even matter. Kind of like the US border. Just jump across whenever you like. The trend on the blue line here is starting to fade. But we're still above zero. So everything is just maintaining structure at this point. Waiting. That's what we're in. We're in wait mode. Looking at what's down this morning, we've got Bitcoin and Bitcoin, gold miners, uranium, energy, metals, mining. The Mag 7 up volume is down. And really, that's about it. On a lot of these that are down, like this Bitcoin here, it was up 3.5%. So the fact that it's down 1%, I mean, you got to kind of weigh the idea. It was up 3.5%, just kind of needed a little bit of a pullback. The miners were up 4.5% over a 5-day period. And so a 1% pullback, it's still up more than 3.5%. So it's not like we're trending down and crashing and burning. But some of the ones that are concerning are things like financials. They're not down enough yet, but they are down, and we don't want to continue to see them go lower. WTI just got whacked. Thank you, sir. Oh, I rearranged my grid. Where's my charts? There we go. I like that song by Shaggy. It wasn't me. That was you, wasn't it? You did this. So right down into that previous low, depending on if you're looking at Brent or crude. I think Brent took it a little harder. After a move like that, keep your eye on the dollar. So we got financials down. That's a little bit of a concern. Chips and Mag 7 are basically flat, along with banks and communications. So flat is fine. That isn't going to help us rally, but it won't knock us down off of the pedestal either. But you want to keep your eye on them to see what they start doing after the open. If they're just hanging out, they're not getting a lot of flows, and we don't see a flight to safety, then all's well that ends well. But if they start getting flows and it's positive, look for the top side breakout, obviously. And if it starts getting negative, try to confirm it with that flight to safety. Use the ratio like XLY, XLP. That's a nice flight to safety ratio. Or just look for money flows to diverge into more of the staples products. I'm not expecting to see that sort of behavior, but that's what we want to be concerned with, right? Is that if things start to break down, that money rotates out of the high flyers and the growth and into the value and the staples. So flat is fine, right? It's not certainly not going to help us on a breakout or any expectation of a breakout. China's up. Multiple ways of evaluating China. All of these symbols, except for the VIX up there, all of these are China. So KWEB, MCHI, the Hang Seng Index, and then below all of those, solar, which I really attached to China anyways. Mag 7 down volume is up. Yeah, that's weird. Just wrap your head around it. Emerging markets, that's China too. But it's not up much, right? The ones that are really kind of pulling their weight would be MCHI and KWEB. This yen is a double or a triple leveraged product. So, I keep my eye on it, but I'm more interested in KWEB and MCHI, and they're both up well. So every day, as it always is, it's GTFO, right? Get out of the box to do anything else. And at the moment, that box is basically VWAP to the upside, and the lows that we've put in, but I marked yesterday's low basically. This is the lower box. If you want to be strict about it, then it's going to be all of our Globex from the Globex high to the Globex low. That's following the set of rules that we've always had, right? First you mark your Globex, then you mark yesterday's range. For a topside breakout, we've got to get through our own Globex range that we put in, which is really yesterday's midpoint. Then we can challenge yesterday's high. To the downside, we've only got one box to deal with, and that's the Globex low that we put into place. really. Then we've got the weekly floor pivot, and we can expand beyond that, right? If we break S1, then S2 is 67.73. But that gets us into like the midpoint of Friday. RZD, do you use a moving average that's different than the ones that I named? Like you got an odd duck that stands out? Was it Brian Shannon that talked about using fib values, right, in his book? If I think it was Brian Shannon, but if not, I have to try to figure out. I know somebody had a book out that talked about using fib values as moving averages. 821, 34, 55. Yep. I really think that was Brian Shannon, but I can't remember and I don't want to say it was and then be wrong. Yeah, I saw that video. I can't believe it, but I mean, he sold it, right? So when he when he sold it, I was shocked. I couldn't believe that he was selling tasty trades to begin with, but then he said, well, he was going to stick around, and now he's not sticking around. Um, there's a website attached to all of that called the Luck Box. I don't know if you guys go over there. I do, because he had Doe, and Doe is like Tasty's version of Robinhood. It's a really streamlined app. It's really nice. Um, I don't know if he sold Doe, and then there's the Luck Box. Hey, what happened to the Luck Box? Maybe it's gone now too. Luck Box magazine. I just had the wrong one. There it is. This is also tied to Tasty Trade, right? So I don't know. He's got other things, you know what I mean? But it was bound to happen once he sold Tasty. You knew he wasn't going to be there forever. It's the same thing when he sold Think or Swim to TD Ameritrade years ago. He hung around for a while. His whole team did, and then they finally started to branch out on their own. And almost every one of them have their own service at this point. So if you guys haven't been here, this is called Luck Box Magazine. It is informative to say the least. They usually have really great articles, and it's got that tasty vibe to it. It's free. You don't need any. You don't have to pay for anything, right? Because it's the tasty way. They're not trying to get you to sign up for some monthly service. All right. So as usual, guys, we don't want a rally day based on pot stocks and China names, right? If you're gonna look for an S&P breakout or a Nasdaq breakout today, you got to get the Mag 7 involved. You got to have the communications, chips, finance, tech, and we don't have any of that stuff. But on the other side of this coin, we don't have a lot of negative from the Mag 7 and the same groups that I just named. They're flat. So if we get bullied or influenced by something else, bond, treasuries, commodities like oil, then we could see the market move because of that. Otherwise, we're waiting on headlines. and none of those headlines are expected to be good headlines. The government is supposed to run out of money by midnight tonight, and then we will see layoffs or furloughs or people getting fired and goodness knows what else, and down the rabbit hole we go. All right, so it's what I got for you guys. Be careful, be safe, watch the clock, and remember, it's all GTFO, right? We got to get out of the box before we do anything else. And the TRB is done. We can generate a scoop pattern and we can get back up to that 67.50, but it won't be a TRB because the beauty of the TRB is that single candle shot all the way back up, right? That's what we would have wanted to have had, and we didn't get it. See y'all tomorrow.